Hi, morning. Equity markets in consolidation mode at this juncture, with the Nifty 50 trading with cuts of about 0.25% in early trade. And this is par for the course. This is something that you saw playing out in yesterday's session as well. Nifty 50 trading in a bit of a narrow range, quite a few of those stocks at elevated levels being sold into, and therefore whenever the Nifty climbs to what it was yesterday, a high of 15,915, it got sold into. It ended at 15,815 or thereabouts. It opened at close to that level, and it's since given up those gains. It's currently trading at 15,772. The constituents of the Nifty, if you look at it, you have about 16 stocks that are advancing at this juncture, and not big advances. So you have the likes of SBI Life, Wipro, Titan, Power Grid, Divi's Lab, and TCS that are gaining at this juncture, but not really very tremendous gains. Reliance Industries up about 0.4%. It's a stock that you'll have to watch out for. The Economic Times has reported that the company has entered a joint venture agreement with in Abu Dhabi to set up a petrochemical facility with an investment from its side of between $1.2 and $1.5 billion. If that announcement does come, you could see that Reliance will move in terms of the stock price, and that will shift the index one way or the other. You have quite a few losers, like I mentioned, the likes of ONGC, Bajaj Auto, Hindalco, Britannia, ICICI Bank, M&M, Kotak, and Maruti all losing over 1%. So broad-based, in fact, you have quite a few stocks that are seeing selling at this juncture. The broader markets are actually outperforming the benchmark at this juncture. You have the mid-cap index that's up about 0.2%, or rather you have the small-cap index that's up about 0.3%, and the mid-cap index that's flat at this juncture. And what are the factors that you have to bear in mind? India VIX has also cooled off significantly, so you could see that the choppiness that we've seen in the recent past, the extreme volatility, that is cooled off at this point. It's simply a wait and watch mode, and that seems to be taking from what the government announced in the press conference yesterday as well, with the finance minister talking about measures that are aimed at improving the fiscal situation for India. Some economists have pointed out that it's not a large amount of spending that is going to be entailed from those announcements. It's an expansion of the measures that have already been announced in terms of the emergency credit line guarantee scheme that is being widened. You have measures for the poorest of the poor, with the free grain scheme being extended, so social welfare schemes being extended, not a lot of fresh spending. So one of two possibilities: either the government believes that the economy is in a better place than all of us seem to think, or it must be seeing something that we don't. Or the second aspect could be that the government is being pragmatic and cautious at this juncture in anticipation that there could well be a third wave of the COVID-19 pandemic, and hopefully it's not going to be as damaging as the second wave, but there could be some disruption, so it wants to get that out of the way before it really pushes to pump prime the economy. So those factors are causing perhaps the government also to be in wait and watch mode, and that seems to be the case on the street as well. Do stay tuned, lots more updates over the course of the day from ET Now.